Hello friends, welcome. Let us see today's analysis on Nifty. Today is 20 May 2026, Wednesday. So the first candle opened gap down, but it was a bullish candle. Now in the bullish candle for first candle, there is no entry because immediately there was a resistance. Second candle also bullish pin bar, a little bit indecisive. So this two candle got consolidated. And today's CPR is average CPR. So the third candle has broken this range, the first candle high. So this is the breakout trade. We should go long here. First candle high. Okay. The stop loss will be below the swing, like second candle low, and then the third third the target will be 1 is to 2, which is somewhere here. Now you have to see one thing in this trade, that the previous day is sideways, mostly sideways to downtrend, and this CPR is almost a virgin CPR. Only last two candles touched the CPR, but still it can be treated as virgin CPR. Now on this trade, the first trade on third candle, there is the virgin CPR on the way, but the advantage is the CPR is very wide. So at least the candle has potential to move within the CPR. Okay, so we have to keep 1 is to 2 as a target, or this pivot, this green pivot, or the central CPR of this, or 1 is to 2, whatever is closer. So first trade achieved our target. Now in this virgin CPR, you have to, if you go like uh, uh, a standard way of trading. So virgin CPR, we have a trade like once it reaches here and the candle reverses, it is called virgin CPR reversal pattern. So on this candle, 10 a.m. candle, the virgin CPR reversal pattern happened. So if you go short here, you should ideally go short here. Your stop loss should be out of the virgin CPR, like the top of this virgin CPR, somewhere here. So look how big is your stop loss, or even the central pivot of the CPR. Okay, and then from here to here, and then 1 is to 2 is your target. So between 1 is to 2, there is a first candle low, like a day's low is also there. So it's a less probability. But this is not the reason for not taking the trade. The main reason for not taking the trade will come with backtesting and practice. Why? I will tell you one simple thumb rule and very effective thumb rule. This kind of days happen very rarely, but if you capture it, you can capture the full move. What is the mantra for such days? The first criteria is the CPR should be average CPR, and the pattern should be range breakout pattern. So whenever on the third candle only, I can say that today's market will close on the highest point of the day. Why? Because third candle has closed above the first two candles, which is a range breakout trade. So this was the range. Okay, the third candle has broken it, and this is very high probability trade. When it happens in the third candle, you go test it backward. When the first candle high, first is a bullish candle, second is also bullish candle, but second candle does not break the first candle high, and the third candle breaks the high of the first candle, or vice versa. It can be on the downside also. In that day, if the CPR is average, you go and back test, you will find that the market has given you the highest move on that day. Like, the market will close on the highest point. So what happened? It is almost near the highest point. So from this point, you can capture the full uh, right. And when this happens, so what happens? My this trade will be low probability trade. So I will not take this trade, the CPR reversal trade, because I captured in this. I have predicted, or I have uh, analyzed the market. That market will go on basis of this pattern. It will go. And as I usually say, the market respects the first trade of the day. Before, suppose the first trade of the day, either target should be achieved or stop loss should be gone. First, in fact, first trade is the first candle only, which is called gap down reversal pattern. But this has closed on the pivot, so we will not take it here. It was a low probability trade. The third candle has closed above, and this satisfies all the criteria of the range breakout trade. This is called range breakout trade, and it is a high probability on a average CPR day. Narrow, not too narrow, but narrow to average CPR day. This is the high probability, and exactly what has happened. So if you know that this market is on the third candle only, if you know the market is going to close on the highest point of the day, you will not take this trade. So that is how this becomes a low probability. And then as usual, I said when the 20 EMA is broken, we can go long. But in this 20 EMA, what happened? Back to back big candles. And it happened within Virgin CPR. So no point in going long here. So the second long entry would be after closing this PDL, above the PDL, this candle. But you see, this is not a proper breakout because this could not close above the wicks of this candle. So this is also low probability. But if you take this trade, you should exit at the CPR level. So that's it. I don't see any other trades on this day. So my trade would be on the third candle straight till the end of the day. Like somewhere in the CPR, I will put my profit on the CPR here, or on this line, or here on the day's sale. So this will come out of experience. So that's it. Today's result is third candle target 1:2. Also, if you keep, you have achieved your target somewhere here. And then after that, there is no trade. This is a low probability trade, so no trade. So result is one target achieved. That's it. Thank you. Bye bye. Take care.